Question number 3, Tim Macindoe. Order. No, order. Tim Macindoe, question
Thank you,
number
Mr.
3.
Speaker.
My
question is to the Minister of
please.
Finance. How is the New Zealand economy placed to withstand current global financial market uncertainty?
The Honourable Bill English.
Mr. Speaker, as I mentioned yesterday, we are continuing to see bouts of concerning economic news from Europe, and I expect that this will continue. The effect of this is to put every debtor country under the microscope. In particular, financial markets are asking whether debt levels are acceptable, whether there are plans to contain debt and get it down, and whether government policies are helping or hindering growth. In this respect, the New Zealand ship is in better shape than it was 3 years ago, but the seas are getting rougher, so there is more work to do.
Tim Macindoe.
Thank you, Mr. Speaker. How does New Zealand's economic position compare with that of other countries?
The Honourable Bill English.
Well, Mr. Speaker, we compared to similar developed countries, we've come through the recession and ongoing market volatility in reasonable shape. However, compared to developing countries with significant surpluses, we are much more vulnerable to volatility in financial markets. However, looking ahead, we have many opportunities, particularly to increase our trade and therefore our ability to earn higher incomes and create more jobs for New Zealanders by trading with the fast-growing surplus countries in the Asia-Pacific region.
Tim Macindoe.
Thank you, Mr. Speaker. What risks does New Zealand face from the current global economic environment?
The Honourable Bill English.
Well, Mr. Speaker, there are really two sorts of risk. One is financial market risk. New Zealand has high levels of external debt, mainly in its household sector, and we have to continually return to those financial markets to borrow more from them. If they're volatile, that may make the borrowing a bit more problematic. The other risk we have is demand risk. That is in those high-value markets such as the US and the UK and Europe, when they're facing financial volatility and a slowdown in growth, it's likely they'll be less willing to pay the prices we want for our products. So that could flow through to a slowdown in the New Zealand economy.
Tim Macindoe. Thanks, Mr. Speaker. What steps has the government taken over the past 3 years to reduce our vulnerability to volatile global markets?
The Honourable Bill English.
Well, Mr. Speaker, first can I say that our exposure to these markets has built up over quite a long period of time, over the last 20 years or so, but particularly so since about 2005. And it's going to take some time to get New Zealand back into a position where it isn't vulnerable to these markets. In the meantime, the Reserve Bank has taken a number of steps to ensure that our banking system is secure and well capitalised, and the government has taken significant steps both to get its own debt under control, but also to encourage the household sector to get its debt under control.
I beg your pardon, the Honourable John Biscoe, supplementary question.
Supplementary to the Minister of Finance. Would narrowing the gap between New Zealand's GDP per capita and Australia's GDP per capita make the New Zealand economy more able to withstand global financial market uncertainty? If so, has the gap narrowed or widened since he took office?
The Honourable Bill English.
Mr. Speaker, I couldn't answer the second question in detail, although it's likely that in the current calendar year New Zealand will grow faster than the Australian economy, which tells us we may be more likely to close the gap. But certainly if we were able to increase our savings and channel our investment into the tradable economy rather than reduce our savings and borrow money to fund consumption and housing bubbles, then we will be more likely to close the gap with Australia.
Question number 4, the Honourable Trevor Mallard.
Mr. Speaker, my question is to the Minister in charge of the Rugby World